Money is something that everyone desires, from the humblest beggar to the wealthiest billionaire. It's more than just a piece of paper. It's an obsession, a universal language understood by everyone, from a PhD scholar to an uneducated politician. Money has revolutionized humanity, enabling us to move from living in forests to building skyscrapers that touch the clouds and developing vehicles faster than the wind. But here's a paradox. Money itself holds no intrinsic value. It's a mere representation, assigning value to other things. So how did this symbolic piece of paper gain so much power? Let's explore the history of money to uncover its journey. The history of money, from barter to banking. Thousands of years ago, humans relied on the barter system for trade. To acquire something, one had to offer something else of value. For instance, if you had rice but needed sugar, you had to find someone who had sugar and needed rice, a tedious and inefficient process. To solve these problems, humans turned to commodity money, using universally valued goods like cattle, grains, tobacco, or liquor as mediums of exchange. However, commodities had their limitations. They were perishable, difficult to transport, and often hard to standardize in value. The solution? Metal currency. Coins made from gold and silver became a universal standard, but carrying heavy gold coins posed risks of theft and inconvenience. Enter the goldsmiths, who offered to safeguard people's gold in exchange for a receipt. A promise to return the gold on demand, known as an IOU. The birth of modern money, a legal scam? These IOU receipts quickly gained acceptance as a form of currency because people trusted they were backed by gold. Over time, goldsmiths realized something fascinating. Most people never came back to claim their gold. Instead, they traded using the receipts. This realization birthed a game-changing idea, issuing more receipts than the gold they actually held. This deception marked the start of what is arguably history's greatest legal scam. These gold safekeeping shops became the world's first banks, and the IOU receipts evolved into modern-day currency. How banks create money. Most people think banks operate simply by lending the money deposited by customers. For example, you deposit 1,000 rupees in a bank. The bank keeps 10% as a reserve, 100 rupees, and lends out 900 rupees to another person. The bank charges interest on the loan and pays you a smaller interest on your deposit, pocketing the difference as profit. Sounds straightforward, right? But there's a bigger game at play. In reality, when the bank lends 900 rupees, you still see 1,000 rupees in your account. Meanwhile, the borrower also has 900 rupees in their account. The bank has effectively created 900 rupees out of thin air, doubling the purchasing power in the market. This cycle repeats as the borrowed money gets deposited and reloaned, turning 1,000 rupees into nearly 10,000 rupees in virtual money. This system, called the fractional reserve banking system, relies on probabilities. Banks assume not everyone will withdraw their money simultaneously. But if 20 to 30% of customers demand their money at once, the bank collapses because most of the money exists only as digital entries, not as physical cash. Money versus currency. The confusion between money and currency traps people in this system. Currency is a medium of exchange with no intrinsic value, like the notes in your wallet. Its value is based on trust and government backing. A currency can lose all value overnight if the government declares it invalid. Money, on the other hand, is a tangible asset with inherent value, like gold or silver, which retains worth regardless of government policies. Real gold versus digital gold. In today's world, many advocate for gold bonds or digital gold investments. But here's the truth. Real gold is irreplaceable in times of crisis. A certificate of digital gold won't buy you food during a pandemic or economic collapse. Real gold, stored securely at home, can be a lifesaver in emergencies. Yes, buying physical gold may involve taxes, but in practical scenarios, those are negligible. Your priority should be preserving assets that hold value in any situation. Conclusion. Money is a powerful illusion, built on trust and a system designed to favor the few who control it. Understanding its history and mechanics can help you navigate this complex system more wisely. Remember, while currency is fleeting, true money, like gold, is enduring.